Hi, I'm Hannah Wallace and welcome to Finextra TV's Thought Leadership Series. Kindly joining us on the call today is Derek Garriock, Design and Innovation Director, and David Kerry, Head of Data Insights for Experian UK and Ireland. So gentlemen, thank you very much for joining us. Welcome.
Welcome. Hi.
Thanks, Hannah.
Today we're talking about the changing mortgage market, and like many areas in the industry, we've seen some interesting new trends emerge as a result of COVID-19. So this one in particular, we actually saw a standstill back in March, but interestingly, there's been a change of tide and we've instead seeing a surge in demand now, aren't we? So David, I'd like to come to you first. Could you take us through the reality of this and explain how the market has shifted, especially with the introduction of furloughs and payment holidays becoming more common?
Yeah, it's an interesting point, actually. I mean, the COVID health crisis and then subsequent financial crisis has had an impact on all lives. It's actually had an impact on all markets as well. So as the COVID crisis took hold, a number of the market paused effectively whilst consumers and lenders alike figured out what to do. The mortgage market was a little bit different in that actually we saw a complete suspension of that market for health concerns. So it was down for a period whilst other markets were still lending. When it's come back, it's sort of come back with a boom. We're in surge now, and what we're seeing is that there are three main drivers really of that increase in applications. So the first one being that pent up demand and that backlog that wants to be processed. The second part is government stimulated. So we saw base rate cuts in March, two of them, and then subsequently we've seen the removal of stamp duty, which has acted as a stimulus to encourage that market moving. And then thirdly, I think as people have sat at home during the crisis in lockdown, there's been a re-evaluation of what their needs are. Previous luxuries such as inner city living, where you've got access to the city, to the restaurants and the shops that have been closed throughout COVID, and access to a garden, which is perhaps something that's more applicable to a rural setting, becoming the new luxury. So I think some of that as well is driving this surge that we are seeing. But it's a difficult market. Lenders have a number of things to consider, and initially products were removed from the market whilst lenders figured out what was appropriate to lend to consumers. Products have come back to the market, particularly the higher LTV, the subprime lending products, and also the income multiples, but less so than what was there before. So what we're seeing now is a bit of a change in the product availability, which is also impacting the new lending. We're seeing changes in terms of who's doing the borrowing, with less younger people and first-time buyers accessing the market and using the market. I think this will change over time as lenders become more comfortable with the growing trends, but there are still a number of concerns on the horizon. Payment holidays, of which 1 in 5 historically have taken a mortgage payment holiday, the furlough risk, which may turn into unemployment, and then the general unemployment concern, no doubt, are front of lenders' minds. So I think whilst the resilience of that industry and its ability to come back so quick and then build to this surge and manage the surge in demand that we're seeing is formidable and great, I think there's a lot more challenge on the horizon.
Yeah, it's going to be fascinating seeing how things develop. And now, Derek, coming to you, I want to take a little step back and look at how the wider landscape that we're seeing change so rapidly is impacting the mortgage market as a whole. Can you tell us a bit more about that?
So I think the challenge for lenders over the last few months has been in the context of disaster recovery plans were very much about moving staff from one building to another, rather than being in a place where you effectively ran your entire operations from homes across the globe. So even albeit that it's the UK mortgage market that's been supported, a lot of the big lenders effectively offshore a large part of their operations, and it's proven challenging for them being in a place where they can maintain service standards and move things forward with the same pace. So I think that they've faced into that as a kind of primary challenge. Alongside that, I think the other issue that we're seeing emerging at this point in time is around consumer affordability. So the impacts of the pandemic effectively are widespread, but one of the things that we've effectively done as an industry is we've protected customers at this time of vulnerability, which has then resulted in a lack of information or understanding whether people maybe be furloughed or they're self-employed and they've received payments from the government, either through grants or bounce back loans and such. And as a result of that, there's a lack of clarity really in terms of what the future affordability position is for individuals. So there's a big demand that we're seeing at the moment around how you can start to use services like open banking and such to really power an understanding of what an individual's current position is. Alongside that, we're also starting to see a big focus from lenders around retention and being in a space where they really want to be in a position where they protect the existing book as best as possible. But given the nature of the UK mortgage market with 2 and 3 year fixed rate products, there's a lot of people that over the next 6 to 9 months will be rolling off. And it's very much about how we can use technology and capability to help retain these people on book.
Mm-hmm, mm-hmm. Well, that leads me quite nicely into my last question then. So in order to respond and enhance the mortgage journey and market, what would you say are the most critical components and considerations firms need to take? Dave, let's start with you.
Yeah, certainly. I think data is going to become critical throughout the next stage of the crisis, and ability to adequately assess a customer's position, both retrospectively for your back book, but also on your new lending decisions. Affordability is critical to that. So having access to the open banking data, as Derek suggested, the transactional level data will become so important so that you can more discreetly determine what people's ingoings and outgoings are going on. I think equally there are risk indicators that will need to be looked at in the near future, such as payment holidays and payment holiday outcomes, and equally some of the more traditional risk measures that we tend to look at through economics, whether those be unemployment risk or perhaps property price changes. Certainly for the mortgage market, I think there's going to need to be, in order for them to effectively reopen the market fully with the higher LTVs and perhaps introduce more risk into that market, more ability to be able to take on this additional data and process it quickly to make those quick decisions.
That's interesting. Derek, is there anything you'd like to add?
I think for me, what you've got to step back and look at is that customers' expectations are constantly evolving and changing. And as an industry, we have a challenge in terms of how we respond to that over the coming years. Ultimately, the pandemic will have driven a higher level of digital adoption across not just the mortgage industry, but across society. And I think as a result of that, consumers' expectations in terms of how we serve them will have dramatically changed. And as a result, you end up in a position where you need to adapt and evolve and better serve those customers. As Dave's mentioned, using data really can take things to a different level. We did a deep dive over the past 12, 18 months into the mortgage customer journey. And our view is that we can probably strip out about 75% of the cost within that process through better use of data, consented data and validated data, and be in a position where we can drive far better and quicker decisions. So there's a massive opportunity that's sitting there for the industry to go after. As an example, we work with an organisation in North America who have already adopted the use of data in that way, and they've been able to go out with a really strong proposition in market to provide an agreement within 8 minutes for people to draw down their mortgage. But that is driving significant market share for them as a standout organisation in that market, because they are providing a differentiated level of service, but it's delivered through better data and better decisioning through their transformation program that they've evolved in recent years.
Mm-hmm. That's interesting. Well, as I said to Dave, I'm looking forward to seeing how things develop, and you've both certainly painted a picture there, so we'll be keeping an eye on this market. But for now, we'll leave it there. Thank you so much for calling in and sharing your insights.
You're welcome.
Thank you, Hannah.